Market moves today. Chris Conway from the Australian Stock Report joining us now live from our Melbourne studio. Chris, good morning to you. And the market obviously not in really positive territory, surely down about 0.5%, but we are paring back some of those losses a little bit. So as you mentioned, Carson, we've got Santos up about 0.5%. Might focus on that one for the moment. What do you make of Santos coming back online in positive territory after completing that raising?
Good morning, guys. Yeah, look, with Santos, I must admit it's not a stock I cover in any great detail. I would agree with lots of the comments from other analysts this morning. It's good for them to get the final part of the capital raising away. The bottom line for me, however, on a play like this is they are still a company that carries a mountain of debt. And of course, the thing that they're selling is heading further south. My outlook for oil is that we'll continue to head lower. Structural oversupply in that market remains. And I think it's about 12 months until that structural oversupply washes through the system. So there's a chance oil prices visit the low 30s. And whilst that is the ongoing environment, I can't see a company like Santos, regardless of the fact that they've reduced their debt and completed a capital raising, turning it around anytime soon.
Let's switch and let's talk a new farm, ticker code NUF. Now, I'm noticing some sell calls went out on this one, certainly just into the new month, that's to say into December. Morningstar specifically cutting to reduce from sell. Sorry, that was a raise from but it had been previously on a sell. It's now losing 3.4%. Given the elevated PE, have what they said today, given you fresh confidence that they can vault to the next level? Well, this is as good as it gets.
Carson, I actually haven't seen what they said today. I was obviously prepping for this interview and on the way to the studio. But
I'll just summarise it. I mean, they basically come in and said guidance forecast to be in line with or ahead of the previous year on an underlying EBIT basis. So you'd have to take that as generally a bullish call. They haven't sort of scaled back as we've seen for the likes of Dick Smith and friends in the last few, or Spotless and friends.
But then on that news, you're seeing the stock lose about 3.4%.
Yeah, so there's a lot of premium built into the stock price. It had doubled in the last 12 months from around 430 to 860. I think it was trading at some point this morning, or even 880. Probably has been as high as $9 if my memory serves me correctly. As you say, elevated PE. So in terms of continuing that trajectory, I think they were really going to have to hit it out of the park today. So saying that it will be in line or a slight beat probably isn't enough to continue the momentum. And the other thing as well is the cost out story. You know, they mentioned they launched a cost out story in February this year. They're restructuring their North American operations, trying to rationalise that, looking to save about $116 million. Probably haven't delivered enough on that yet either, but of course it is only early days. So, you know, it might have been nicer to see some firm evidence that that story is working, but I think, as I said, it's the fact that it's been so elevated. It is on a very, very strong PE. Share price has doubled. I just don't think the momentum is sustainable, but still a good company and still probably a buy on a further pullback.
Can we talk the market more broadly? Because it's tracking at 5,235 right now. We're heading into this Christmas period, and yet we're still seeing commodities continue to fall quite significantly, with iron ore and oil prices both weaker. So what's your sort of prediction now, your forecast for where you might see the market head at the end of December?
Yeah, so Ingrid, I'm not too concerned about the pullback that we're seeing today. I think what happened overnight in the US, look, it really caught me off guard. I don't think Janet Yellen said anything that we hadn't already heard before. She basically just reaffirmed what we already knew, and that was raising rates in December. So in terms of the Aussie market, I still think we can rally into the end of the year, and it's on that certainty of what's going to happen in the US. Again, commodity prices and commodity plays won't do us any favours. They will probably continue to fall on that expected US dollar or continued rise in the US dollar. But like I said, I think it's that certainty. And then once the decision drops on the 15th and 16th, that trade, that US dollar strength trade, might come off a bit, and I think there's going to be a rotation into a rotation into yield, and the banks will pick up and carry us up to probably 5,400, hopefully by year's end. So, you know, I've talked before on the show about the US dollar strength trade being overcrowded. I think that is becoming more and more overcrowded. It's no secret that you should be chasing companies that have US dollar earnings at the moment. We've seen Computershare, Aristocrat, Magellan, Macquarie, all these names that have US dollar exposure outperform recently. That cannot last forever. Like I said, I think that trade pulls back a little bit. rotation back into the banks, and as I said, that pushes us up to 5,400 hopefully by the end of the year. So that's my market map. Hopefully we do get that Santa Claus rally.
Let's hope you're right, Chris. Thank you as always. Have a good week. Chris Conway there from the
Thanks, guys.
Australian Stock Report.